Chris Slight, the editor of International Construction magazine, and welcome to this video, which is an outlook for global construction and construction equipment markets for 2014. In this video I'm going to look at where the markets have been, where they are now, and hopefully give some pointers about where they're going. But the overall message, I think, really is that markets are improving around the world, conditions are getting better, and we can look forward to more buoyant times. The other thing I'd say about this video is most of the information sources I'm drawing upon are things that are freely available from KHL. They're studies that have been in our magazines, news stories that have been on our website or in our newsletters. And these are things that you can read or consume in any way you want, through the magazines, websites and newsletters, but also through things like our apps, our iPad editions, and videos, podcasts, you name it really. So first of all, let's look back at 2013 and where the markets have been. I think everyone would agree that 2013 wasn't a great year for the global construction equipment industry, and this is something that we talked about in the April edition of International Construction in our yellow table study of the world's 50 largest construction equipment makers. One of the things that found was that last year construction equipment revenues were down about 12% globally, and that's illustrated by this graph. The vertical columns show revenues in billions of US dollars in absolute terms, and the darker line charts the changes. The main reason for this was the downturn in global mining activity, and although that isn't really directly related to construction, it did have an impact on construction equipment manufacturers. Another factor was the depreciation of the Japanese yen last year, which hit the dollar value of the industry. And of course the other thing that's been a bit of a persistent problem for the last 2 or 3 years was the weakness in the Chinese construction equipment market. So as I said, that was the yellow table study from the April 2014 edition of International Construction. If you don't have a copy of the magazine to hand, it's available as a digital issue from our website as well as an iPad edition. And embedded in that iPad edition is a video and a podcast which talks in more detail about the yellow table and some of its findings. And those videos and podcasts are available separately. Go to the video zone to watch either, and you can also catch the video on the KHL Group YouTube channel. So 2013 wasn't a great year for the construction equipment industry, but in the global construction market there were some pretty good signs towards the end of the year that things were picking up. So what I've drawn together here are forecasts from various sources for construction market growth for various regions of the world. And the first thing to say is it's not looking bad at all. This year will be the first time since the global recession that every region in the world has grown. The highlights, of course, are the very strong recovery in North America, but also worthy of mention is Europe, which is returning to growth after 6 years of recession. For high growth, of course, you have to look at regions like developing Asia and sub-Saharan Africa. But if you average all this together, the overall global construction growth for this year is about 4%. Moving on, this looks at those same regions, but it looks at their relative size as a percentage of total global construction output, which I've estimated at about 6.5 trillion US dollars. So the first point to make here is that 4% growth from the last slide equates to an additional 260 billion US dollars more construction output this year. As a bit of an aside, this is the kind of information that we use to build the circulation for our magazines. We look at market size and growth and use these hard facts to decide how many copies to allocate to a given country. So what we do is we target the most vibrant and significant construction markets, which is where your business is. So moving on again, if you take those 2 last slides and plot the growth trends and the market sizes together, you get a very interesting view of the world construction picture. Developing Asia is clearly a growth leader, and that's why we target a third of international construction circulation there, for example. But this chart also illustrates the importance of a market like Europe, where growth isn't great, but it is the biggest regional market in the world, and that's why a magazine like Construction Europe is so successful. And it also shows the importance of mid-sized developing markets like Latin America, where we publish Construction Latin America. And of course, international construction is the catch-all. We're very proud that it's read in every country of the world, so more than 200 countries. So as I said, there was evidence in 2013 that global construction markets were picking up quite nicely. And that was a message that came out loud and clear in the July-August 2014 edition, when we published our annual study of the world's 200 largest construction companies. This graph shows revenues and profitability for the top 100 contractors over time. The key finding from these figures, which were from 2013, was that last year there was a 7.3% increase in revenues for the top 100, and there was also a useful uptick in profitability after 2 years in the doldrums. So they're two very clear indicators of the market upturn last year. In fact, I'd go as far as to say it's not just an indicator, it represents the industry. These top 200 companies account for about 20% to 25% of global construction activity. So when they move up, you're very safe in saying that the whole industry has moved up. As I said, there's a lot more on this study in the July-August edition of International Construction. There's a video on the website and in our iPad edition of the magazine, and you can also see that on our YouTube channel. It's also something we discussed a lot in the July-August podcast, and again you can find that on the website or find it through iTunes or listen to it through the iPad edition of the magazine. So there's one study that points very clearly to a global market upturn. As I said, this is something that's freely available from us on our website in whatever form you'd like to consume it, be it the magazine, the digital issue, the video, the podcast, or whatever. As I said, this information is developed and put together primarily for our readers, but it's something that I hope you find useful and I hope you're aware of and are able to use a lot. And there's lots more in the pages of the magazine that you may find useful. For example, every issue we have a contribution from IHS Global Insight, which is probably the most well-known and well-respected global construction forecaster in the world. And again, this information, although it's primarily for the readers, is something you might find useful in your marketing decisions. There's also a lot of forecast information around that's freely available elsewhere, and this is one thing I'm going to look at now, starting with the International Monetary Fund's global gross domestic product forecasts. The information I've put up here is the GDP growth figures from the IMF for last year, and as you can see, it's pretty lackluster, although these figures did contain the seeds of the recovery that I've been talking about. Now if you jump ahead to 2015, you'll see the forecast is for a much brighter picture. The developed markets are looking pretty steady with reasonable growth, and the dynamism has come back to emerging markets. Another indicator of the upturn I'd like to talk about briefly is the phenomenal number of mergers and acquisitions we've seen this year in the construction sector. Mergers and acquisitions are a really classic sign of a market upturn because they basically signify the private sector's willingness to invest. So here briefly are a couple of the stories that have made the headlines in the first half of 2014. So early on in the year we had the news that Holcim and Lafarge, two of the largest materials producers in the world, had agreed to merge, and that really is the biggest merger we've seen in any branch of the construction industry for about 10 years. In addition to that, we've seen a lot of consultants talking about merger plans. For example, AECOM's acquisition of URS, the acquisition of Hyder by Arcadis, the acquisition of Kent's by SNC Lavalin, and the acquisition of Foster Wheeler by AMEC. And of course they all featured in the magazines, but we also reported on them as they happened in the news sections of KHL.com and in our weekly newsletter, World Construction Week. So I hope the studies and data that I've touched upon there illustrate that there is a recovery underway in the global construction and construction equipment markets. As I said, most of the information is freely available from us, either on www.khl.com or in the pages of the magazine. But the point I would make is that we have an awful lot of information products, and you can really consume this information any way you like. If it's the magazine, you can have paper, digital or iPad editions. Our web stories are available, of course, on the website, but also through newsletters and news apps. And we also have other media, such as videos and podcasts. And you can catch up with these on things like our YouTube channel and through iTunes. All this is of course developed first and foremost for our readers, but as I said at the start, I hope it's information that you find useful as well. If you have a specific question or you'd like more information, please feel free to get in contact with me. Thank you very much for watching.